Hi guys, I want to take a second here to define risk. Given where you are on the page, if you've been looking at my videos chronologically, coming down the page is maybe a little bit late in the game, but at the same time it's giving you an opportunity to hear me say and refer to risk kind of repeatedly and give you a sense of how important it is to me as a trader. So this may actually be the most opportune time to define it. One of the things that you will hear traders in general say is that if you take care of the risk side of the equation, the upside will take care of itself. Now, of course, that assumes that you have a strategy in place that has a positive expectancy, another term, industry term, so to speak. But basically it assumes that you have a strategy that will produce profits and you want to take advantage of that strategy in the most efficient, risk-adjusted way possible. Okay, so the definition of risk, or a definition of risk, is the potential of loss, an undesirable outcome, however not necessarily so, resulting from a given action, activity, and or inaction. The notion implies that a choice having an influence on the outcome sometimes exists or existed. Potential losses themselves may also be called risk. Any human endeavor carries some risk, but some are much riskier than others. Walking down the street would not be considered as risky as jumping on an airplane. Yes? That definition, by the way, is from Wikipedia. Finance. In the financial realm, the probability that an actual return on an investment will be lower than the expected return. Right? And finally, just the translation. The chance that you will lose some or all of the money you put into something. That is in essence what it is, right? That's what, as a general rule, when you think about risk, that's what you're thinking about. What are the chances that I'm going to lose my money, right? So let's go to the recent chart, daily chart of Goog, right? And the reason that I'm doing this is this. One of the things that's most commonly said when people refer to the stock market or trading in the stock market is that it is quote unquote risky, right? And when you take a position in something, you know, there's a chance you could lose all your money. Well, yes, there is a chance that you could lose all your money. But as you'll see here in a second, the chances of losing all your money in the absence of being a complete fool are slim to none. Okay, so here we have a chart of Goog, and let's just assume, for the sake of assuming, right, this little tick bar to the left here is the open, this little tick bar to the right is the close, and this is the range of prices, right, for this day. This is the high right here, this is the low. Yes. And let's say, for the sake of saying, that on this open, right, you bought the stock, one share of the stock, $859.62, right? And you used as your stop loss, another term that you've heard me refer to, the point at which you say uncle and get out of a position. You use as your stop loss the low of this bar, right? So you would say here your stop is 847.89, call it, right? But given how this stock moves, let's just call it 847. What's the big difference between friends? Yes. So you are what's called long. You bought at I'm sorry, I should have said you bought at the close, forgive me. So you bought at the close, right? You bought at 850.15, and your stop is 847, right, just below the low. Okay. Now your risk on the trade, even though you bought one share, so you spent 850, what was it again? You spent $850.15 for that one share, right? So in theory, right, in a macro sense, your risk is $850.15, right? If that stock goes to zero, that's the amount that you would lose. However, your true risk is the difference between where you bought the stock and where you get out of the stock, or where you would get out of the stock if it trades at that price, right? So the difference between those two, in this case, it would be what, $3.15, right, down to 847, right? So your true risk on this trade and you would have taken a loss, but your true risk on this trade would be $3.15 for every share you bought, right? In this case, you bought 1 share, so your actual risk would be $3.15, not $850.15. Okay, so part of the reason that I did this video was to draw that distinction, because so many times I've heard people who haven't spent any time trading or looking at stocks say things like, basically, you wade into the market and the whole amount of money is at risk. Well, if you act like a fool in the market, then yes, every red cent that you put into it is at risk. If you're going to let it go to zero, then every cent that you put into whatever stock is at risk. But if you're prudent and you recognize and are willing to accept times when you're wrong, there is at no time, as long as the markets remain what's called liquid, i.e. people buying and selling, there is no time at which your absolute risk is the entire value of the security that you own. Okay, I hope that's helpful. I hope it clears up some things for folks who, again, haven't had any experience with stocks or other tradable securities, if you will. Okay. Any questions on that, or if you need further explanation, ask the trader at theartofsimpletrading.com. And barring that, I'll see you at the next video.